Hello, everyone. My name is Jason, the Wizard of Ops. And with me, as always, is Jay, a.k.a. Dark Matter. Jay, how was your weekend, my friend?
It was amazing. I can't complain. So that's even good. How was your weekend?
You can't complain. All right. There you go. Very eventful, Jay.
There's a lot of complaining in this world, so let's just avoid mine.
Yeah, ours was relatively uneventful. I mean, I actually worked on Saturday and stuff like that. But yeah, we did our annual Christmas light drive. We were just driving around the neighborhood at all the Christmas lights. Apparently nearby, there's one that's on the Great Christmas light fight or whatever, that show. We went and saw that. When I saw it, I was, my kids and my wife love watching that show. I like bad lights myself, but they I like when people really try hard and it looks terrible. But these people, like, I looked on it and I've watched enough of the show and I'm like, yeah, they're gonna lose. So they don't have anything super cool. I mean, it's cool, it's great, but it's definitely Griswoldy. I mean, all the neighbors would be mad because the driveways are blocked and all that kind of stuff. But it's yeah. So anyway,
That's good. Good. Do you guys? I assume you probably do the Bull Run light show.
Oh yeah,
yeah.
We do that. We do that every year on our anniversry is November 17th. So we do that every year. I remember the first time we did that, we didn't know there was a carnival at the end, and we drove through, and I'm like, wow, they did a lot of lights over there for a Ferris wheel.
Just went right past it.
No, we didn't go right past it. We just drove.
Okay.
As we got closer, we're like, that's actually a Ferris wheel. Holy crap!
Yeah. There's a bunch of games and things.
Carnival at the end. Whoa.
Yeah. I did not expect that either, and I live nearby it. So
yeah, I mean, that's packed, that place. I mean, it's a really great idea. Same stuff every year, but all right.
But it's cool. It's cool to see. It's still cool.
So Jay, this is Fed Week, man. Happy Fed Week to everybody who celebrates. Yeah, it's Fed Week. I think there's even a couple earnings, but I'm not even going to do the earnings things because they're going to be overshadowed by the Fed. No matter what earnings move happens, if you try to catch an idiosyncratic move, you're going to have to hedge with some market stuff too. So, Jay, what are you seeing?
Yeah, I mean, I assume some of those earnings you're just quickly mentioning in case anyone is interested. We've got Oracle and Adobe. Those two would be quite interesting. We also have Broadcom, AVGO. And then for the memers out there, we got GameStop. That's also reporting this week. And Chewy as well. So
The king of the memes.
Yeah.
GameStop
I guess the one that I'm just looking at this Toll Brothers. Kind of interesting to see how another kind of housing industry ticker does. So that will be interesting to see how they report.
Yeah. Toll Brothers big around here, right? I think they're
Massive.
one of the largest construction companies, right? Like housing construction.
Massive. Yes. Yeah.
They are.
Yeah.
All right. So what are these what are these catalysts you have up here?
Yeah, so I mean, you call the biggest one on the week that's going to dictate this week, and that's Wednesday's FOMC interest rate decision and press conference. So at 2 Eastern, we'll get the interest rate decision, which we're expecting about a 24 BPS cut there. Some might want more, like the president, but I don't think that that's going to happen. We'll jump maybe into that. You can talk a little bit about the event involved for it, but we also have the JOLTS job openings the day before, which is also quite interesting. And then we do have PPI to round out the week. So a very eventful week set in a conclusive way.
Apparently we have JOLTS job openings twice at the same time.
Yeah, I don't know why that took twice
your
there.
Your PPI twice at the same time.
But really wants to highlight those two.
But I think so. Right now, the Tuesday implied volatility is a shade below 14. And the Wednesday implied volatility is a shade below 16. 16 traditionally, actually, mathematically, but rule of thumb, 16 vol has a 1% standard deviation, which means that there's a 1 out of 3 chance on Wednesday. They're expecting a 1 out of 3 chance that the market will move more than 1%. I kind of think that's a little low. I don't know about you, Jay, but I think I think that there's probably more of a chance that we'll move 1% or more, at least through Friday. I mean, maybe not that Wednesday, because that Wednesday you get that, right after the announcement, you get illiquid whipsaw all over the place, and it's that could get, trying to predict the Wednesday close is a bit dicey, but Thursday is usually that real like FOMC move. And I mean, personally, and you could tell me if I'm wrong, but I think that there's a bigger chance of a 1% move. We're expected to get the 25 bips, which is also kind of coincidentally the best possible scenario, right? I mean, last time we got 2 dissensions, one on getting it lower and one on getting it higher. So that's kind of, I think the Fed is a little bit pulled apart a little bit. There's not going to be a unanimous decision. And so if there's like 2 or 3 people saying, hey, let's hold rates steady, I think that's going to cause markets to shed some pounds, right? So
yeah,
I don't know. What do you think?
No, I'm with you there. I definitely think we're going to get that cut, as you just mentioned. So that shouldn't surprise the markets or anyone. And I think that's ultimately priced in my opinion. And that's why we got such a quick rally coming out of the sell-off that we did have. Was that, as some of the data was coming out of the government reopening, right? While it's sold off, as you kind of predicted, right? We did rally quickly out of that. I think that was the expectation. Hey, jobs are now getting impacted. We're definitely having a rate cut. So I think you had that V-shaped rally. Now you're got to face the music, right? And if you look at even the expected move for this week, I was a little bit shocked. It's only 100 points, right? So even to the upside, that puts you at 69.70, to the downside 67, 69 there. You could expect to go beyond that. And here, ultimately, I think what you have to be on the lookout for is, to your point, what the press conference, what the statement of different feds, because if they guide forward in a hawkish way, I don't think that's going to be good for the markets then, for sure.
No.
And it could be a multi-day of fun coming out of that kind of statement.
Yeah. Yeah, we'll have to look at Volland, because, I mean, I honestly look at Volland and, we'll look at Volland about those targets, because I do think that we should expect probably at least touching strikes that are wider than what you have there. So.
Yeah, let's jump into that, because we'll definitely have to kind of go out. I'm going to kind of talk about a little bit about today and maybe tomorrow, where we're going to maybe just sideways chop a little bit, but Wednesday definitely will bring some range. So I think let's just go into the charts here. Why not? So if we kind of take a look at the entirety of the Vanna plot for this week here, we're facing still a little bit of uphill of going into negative Vanna here. So let me just go to the exposure chart here first. So you can clearly see here, right? We're in a negative Vanna kind of profile here. You do have some support here at, overnight, even 68.65 held. And now we're starting to hold 68.75. So basically intraday, what I was looking for is if you're above 68.50, you're going to kind of buy dips, essentially. Intraday is how I was looking at it. So those key levels intraday, or today, what I'm looking at is 68.65 and 68.85. Sorry, I was taking a look at my notes over here. Was that was essentially what I thought today's intraday. But I think what you're going to look at from a resistance standpoint, let me go back into Vanna here, and then we'll look at Gamma. I mean, if you look at basically as you enter 6,900, and even the markets here overnight, they just even can't even get past 68.85 XPX, right? That's in a pool of all this negative Vanna that you see here. And if we go into our Gamma as well, we're in a negative Gamma environment there as well. So I'll quickly pause. I think in conclusion, you might see us bounce into 6,900, but you better be leaving runners if you're intraday trading, and then carrying them much higher. I expect volatility to kind of keep spiking as we're in this negative Gamma, and it's going to be very choppy today as well. So I'll quickly pause. Your thoughts?
Yeah, I mean, I think not just at 6,900, but it's very flat all the way out until like that 7,000. So even on the upside, I mean, I think we were kind of alluding to thinking of a little bit of downside after FOMC, but even if we get some upside, we're not getting that spike until like 7,000. So it's like the first real Gamma resistance that you see. So, I mean, ultimately, we're also talking about the current option plane. I mean, there could be positioning today and tomorrow for FOMC and then post FOMC, especially if there's a sell-off. I could expect a lot of puts getting bought. But that 7,000 strike is like, we're not seeing significant Gamma until we get out there, which is what, 30 points above your the expected move.
Yeah,
that's kind of my thought. Like, and I'm not saying to go out and buy a straddle, because now you're saying that's like a 3 in 4 chance that you're going to lose. But and you're
great
not
odds.
Win very much. Like, buying the straddle is not the play. I hate those. Anytime I buy a straddle, I make a little bit of money for a lot of effort and a lot of heartache. So that's just me. So I don't. but if you wanted, if you want to live on the wild side, go for it. But 7,000 to me is like that, the first place that I would see some resistance. And that's all-time highs, but that's, when you have the expected move up there, then it's not worth it to buy the straddle, but it's also not worth it to sell the straddle, right? So, but that's on the upside.
I mean, if you do have, if we kind of take a look at some of the delta here as well, while we're just talking, there's definitely some dealer support here. But if you start to see that volatility increase, and I think that's the other thing I wanted to talk to you about, is just like what I see. Just let me quickly take a look here at the VIX at 16 handle, right? 16 and 16.28, I think. Yeah. I get worried in the Trump administration when the VIX gets that low, right? I'm like, no way. This is just, someone's pulling my leg here kind of joke. So that worries me a little bit here, because a lot of that support that hinges below spot is if we have volatility compressed, right? So if you see that expand, good lordy lord, we're going to sell. And are we going to sell? And I think I'm going to open up the larger Vanna all expiration here for you to just kind of talk about some of those downside levels.
I mean, the all expiration Vanna is still deeply negative. And, if you pan out a little bit, like zoom out, I've been expecting, and you see, we only got really one strike. I've been expecting a lot more hedging for next year, for the annual hedging. We're getting some, but those two big negative strikes right below current price, I mean, they're not going to be alleviated. We've got some positive Vanna out in the out areas there. You see, right? No, down.
Oh, here, here.
Right there, that range right there, that's some hedging. And we're getting a little bit of call hedging above, a little bit. But we are well away from any kind of like Vanna neutral area, and we're still very negative Vanna. So I'm kind of looking for, I think we'll probably get like a quickie sell off, and I think after that sell off, people will start hedging. And when they start edging, we'll get a little bit of a Santa rally, maybe into early January. But ultimately, I think, when the time comes, I think we're going to probably spike down. The early January is about all I have any confidence in right now, but I think we'll come down, see puts bought. I'd want to see puts bought, and then we bounce back. You see right there, that 7,000 or the 6,700 right there. To me, that is the critical point, because that's big right there on the December OPEX.
Yeah.
And
Yep.
so, I mean, that's kind of my level. And it's even the level, like if you go back to this week.
Yep. Going back.
Sorry. I'm
No, good.
flopping around. That's the not this little peak that's right next to price, but right there, that's 6,700. 6,700 to me is the big strike. I think we will touch it before December OPEX. That's 100 something points down. I'm not saying it'll happen after FOMC. I'm not saying it'll happen by Friday even, but probably by December OPEX, which is next Friday, I think we might see that level again. Maybe not close below it. If we close below it, then we can. That's like almost a guaranteed vol event. But yeah. Well, if we close below it, if you go back to the monthly, or the for
let me go here.
Yeah, December OPEX. If we close below it, we got a waterfall right there.
Yeah. I mean, you look at that; it's just gone.
Yeah. So somebody's got to buy their puts back, right? Like somebody's got to buy their puts back, and that's why I think that's like a guaranteed vol event if we go past 6,700 with speed. I don't think we'll hit that. We may still get a vol event even if we touch 6,700, depending on how fast it is. Like if it's on Wednesday, then yes, we will get a vol event. But that's to me the critical point. At 6,700, I would consider buying a straddle. Like a month out or something like that. But yeah, I would consider buying a straddle for 6,700.
I'm with you. I think we got to retrace here a little bit. I mean, FOMC feels like the right catalyst to start that trigger. Again, not to say we're going to get it all in one day or even the next day, but that is the biggest catalyst that you have here. And then obviously we have PPI later in the week too. So maybe that adds further fuel to the fire. So I'm with you. I would be cautious with longs above here, especially with how low the VIX already is. You further need that thing to compress down, right? And that's asking for a lot. You're running right into dealer resistance here at 6,900 as well. So I think that is essentially my call out. And if we go back to the trade plan here, I think that's essentially what I concluded with. Let me go here. So yes, so intraday upside exists going into 6,900. Let's just call it that. So 68.95 to 69.05. That's where you're going to start to see some resistance, and between even technical analysis and all of the different Volland expirations, that's where convergence lies, is right in that zone there. So you truly need a catalyst to break through that. And then your downside for me, at least just this week, what I'd be cautious for is watching 68.50. You start to see us break there, you're down to 68.30, 6,800 even, and you start to lose 6,800, you're going to go after 6,700 in my opinion. So those are some of my levels for the week that I am paying attention. So again, when we're in these zones intraday, like I'm bullish in this 10-point zone. Basically, you can get into 6,900 between 68.75 and 85. Like there's just a lot of negative gamma there, so you're gonna be choppy. Volatility might spike a little bit here, and then really for me, the short, wait for that 6,900 if it comes even today. I would just be waiting patiently, and that's what I'd be looking at. So upside targets, downside targets. Wiz, any thoughts?
Yeah, I mean, my intraday is definitely different than my swing thesis. I mean, I'm out to December OPEX, but I'm focusing on 6,700 as my swing target. So over the next 2 weeks.
Beautiful.
Mhm.
I think with that, that's in conclusion, as we said here. So I think we are cautiously to the upside. And then obviously to the downside is going to require Mr. Jerome Powell to play ball a little bit here. But that's my thoughts. Wiz,
Yeah.
anything you want to conclude with?
Yeah, I mean, I don't think I think the market might go down despite what Jerome Powell says. I think we've already seen any upside from a rate cut. Almost like, other than if Jerome Powell suddenly turns super dovish, I don't see much upside from this catalyst. I think that the possibility, like the catalyst results are skewed to the downside, and also the positioning is skewed to the downside. So I'd be very cautious with longs going into this catalyst. Or if you are very bullish, I would sit out. So that's just my
just wait to trade after.
right. Yeah. So a couple things. Hold on. We have a couple of good mornings. Hello, Johannes, Julian. Good day. Julian says he's noticed that the ES SPX correlation has been getting tighter from 40 about a month ago to around 10 now. Does that mean anything? Well, Julian, ES futures, because they are forecasting into the future, like what the price is projected to be in the future, have a lot of interest rate and dividend yields that are already accounted in the present SPX number. So ES is essentially SPX plus dividends plus interest rates plus probably since it's a future contract, plus an expectation of what the market will do. There have been a couple times, like particularly in during the ZIRP timeframe, zero interest rate policy, ES was like almost pacing SPX and maybe even being a little bit further down. That's because we were kind of pushing the higher end of the distribution curve, and dividend yields were up, but interest rates were flat. So, I mean, ES and SPX were flat for that reason. The closer you get to ES contract expiration, the closer ES the contract will be to the SPX number. So, no, I don't think that's anything necessarily, unless you are trying to arbitrage interest rates, then maybe it might be something. But that's not a typical retail strategy. So I would, kind of discount that for now, Julian. Apollo says you're on the bid, Jay.
America, all right.
Where's your flag, bro? You can't say America without a flag.
I know. I don't. It's hanging.
Yeah, Derek, that's correct. You're right, Derek. Yeah. So Derek's got you covered, Julian. Yeah. So, other than that, I do.
You really did a good job of explaining that pretty easily, by the way. So I got to give you kudos for being on the spot answering that. So good job.
Thanks. I mean, that's for me. I was like, I understand this one. I could catch this one.
Yeah.
Really quick. Next week, I'm going to be on the Financial Juice Discord talking about market maker hedging. It's a popular topic, especially among retail, and it also seems like there's a lot of disagreement about what happens. I mean, as a Volland founder, I guess, and creator, we've had to do a lot of research, and we kind of have a better idea of we have a pretty good idea of what market makers are doing. So I'm going to talk about that in the Financial Juice Discord. You go enter it. I think it's free to enter. They have sub channels, of course, kind of like our Discord, but yeah, that's going to be a good talk. Kind of help you with the basics of how to read Volland. You kind of look at Volland from the market maker perspective and see how to work it. So other than that, for Jay, Thank you very much, and may Volland help you in your future trading ventures.